Steady start for European markets this morning with the UK's FTSE 100 index up around about 6 points, while the Euro Stoxx 50 index is also higher by just around about 4 points at the moment. The currency space is pretty muted at the moment. The euro has lost some ground against the dollar. It is at that 130 level, coming off its highs from earlier this week around about 131. In the commodity space, gold is taking a bit of a beating. It's down around about $26, while in the peripheral bond market space, Italian and Spanish bond yields are relatively calm. Core government bonds are inching a little higher, so it's not exactly risk on, but we are having a calmer session in Europe, and volatility again is spiking higher. Good morning, I'm Ishaq, Siddiqi, and welcome to a daily market bite. I'm going to give you a quick wrap up of what's going on in financial markets today and what we got to look forward to for the rest of the session. So yesterday we had a positive finish on Wall Street. That didn't really translate into a firmer session in Asia, where we saw the Shanghai Composite fall as much as 1.6%, and that's on the continued worries about a cash crunch in China. Now, the Chinese central bank did inject some funds into the Chinese financial system, pumping in liquidity on the basis that banks better manage their balance sheets, and for those banks that actually need liquidity at the moment, that went to soothe some fears in the market that the Chinese central bank isn't doing enough to safeguard the system. So investors are somewhat welcoming the news that the Chinese central bank has attempted to make some moves in order to quell the issue. But nonetheless, it is a pretty precarious situation going forward, and investors will be keeping an eye on it. And it is one that has been causing a degree of uncertainty, particularly about China's growth prospects, as the country is currently suffering from a slowdown. Now, going on to what happened in the US overnight, we had a batch of strong economic data ranging from durable good orders to new home sales and a S&P Case-Shiller housing report. And at the same time, we also had a pretty strong showing on the consumer confidence side. And surprisingly, that didn't push investors to dump risky assets on the basis that would essentially mean that the Fed could possibly look at tapering quantitative easing a lot more earlier, and instead investors actually chose to look at the bright spots in the US economic recovery. That's provided us some support in the European session. However, gold prices are are under a significant amount of pressure, which is likely to hit the European Basic Resource Index quite significantly. Now, today, so far, we've had French GDP for the second quarter, and it was confirmed at minus 0.2%, indicating that France remains in a recession. And going ahead for the rest of the day, we have very little out on the Eurozone economic data side, but in the US we do have GDP figures for the first quarter, which will be awaited eagerly, given the fact that there is a lot of attention on not only US monetary policy but also the US economic recovery. That is all for your daily market bite. Tune in for another one tomorrow. Cheers.